how many bank accounts should you have? Well, if you've been looking to organize your hustles, you've probably heard that you need at least 4 more. But do you really? Well, today I'm going to walk you through the what and why of business bank accounts. I'm going to discuss the purpose of a business bank account, why they say you should have more than one, the myths about having multiple bank accounts, and you'll want to stay and watch to the end because I'm going to reveal why you should only have one business bank account and the 2 things you need to make that one account act like many. Let's go. So what is the purpose of a business bank account? Well, there are a couple of reasons why you should open a separate bank account for your business. But in my opinion, the main 2 are separation and substantiation. Separation is important because it separates your personal finances from your business finances, which makes the second reason, substantiation, easier. And substantiation is just a fancy word for proof. So hopefully you can see how separating your personal from your business will make it a whole lot easier to prove which income and expenses were personal and which ones were business. And this is really important when it comes to operations and taxes. It's important for operations because if you ever need to obtain business financing, it will be a lot easier to provide business bank statements to the lender in which everything is for the business, as opposed to giving them just a general bank statement, which is personal and business, and having to explain which is personal, which is business. And it's the same for tax purposes. If the IRS ever asks for proof, it's a lot easier to say that all the expenses that are in the business bank account are for the business. And since there was no commingling of the funds, there's nothing that they can disallow. So now let's talk about the idea of where having multiple business bank accounts came from. To be honest with you, I have no idea. I think they came from this book called Profit First. I got the book, purchased it. A lot of people recommended it. I got halfway through the book and I stopped because it was difficult for me to wrap my head around the idea of having multiple bank accounts. But obviously, there are thousands of people who absolutely love this book and the principle that it outlines. And I get it. If you aren't a disciplined enough person to properly manage your finances, then the system that is taught in the book may be a financial lifesaver for you. You see, the idea of having multiple bank accounts is structured like this. You have your main bank account, which is your income account. And as the name implies, you'll have all of your business income go to that account. And from there, you'll transfer a set amount of money from that account to these other accounts. The amount that goes into the expense account will be, well, you guessed it, expenses. And it's the same for the rest of them. The taxes for taxes and you for the amount you want to pay yourself. And these are just 4 accounts. Some people also like to have additional accounts for saving and investing as well. So it's possible to have 6 accounts or more. But here's my question. If you aren't disciplined enough to manage 1 bank account, how are you going to manage 4 more? But as I said earlier, I get it. But what I don't get is this one myth that states having this type of setup will double your chances of getting business funding, which is also a reason for setting things up like this. This myth suggests that because you simply have a business bank account with only deposits and a couple of withdrawals, your chances of getting finances is 50% greater. But here's where I call bull. Financial institutions aren't concerned with the number of transactions. They look at the bottom line. They want to know how much money you are retaining and how you are managing your cash flow. Let me give you an example. You can see here on the income only side, there are a total of 8 transactions. Only two of them are withdrawals, but the account balance is $95,000. Okay. Now let's look at their regular account. Same amount of transactions, but this time we have 5 withdrawals. But guess what? the account balance is still the same. And here's the thing. I've talked to actual bank VPs and presented them with the same exact scenario and was told that it doesn't matter. And what's important is the bottom line. However, they did state that having a bank account with just that type of setup would reduce paperwork, and that's about it. I mean, think about it. What if you made 50 deposits totaling $100,000, only took one withdrawal for $99,000? Do you really think that that's going to have a better chance of somebody making 2 deposits totaling $100,000 and taking 20 withdrawals totaling $2,000? Come on now. So with all that being said, it's my opinion that you only need to have one business bank account. Keep it simple. And yes, there's a way to still manage and achieve the same organizational goals and get the same results as having multiple bank accounts with only one business bank account. The only thing you'll need is 2 things: a bookkeeping system and a budget. The bookkeeping system is going to automatically give you a set of accounts to track your income and expenses. It's called a chart of accounts. And when set up correctly, every transaction that happens inside of that one bank account will be automatically placed into the proper accounts. The budget comes into play because it's going to set the financial caps that you want to go into each account. This part has to happen whether you have one account or 100. You're going to need to set an amount and a time frame that each account will receive. So let's say for the expense account, the budget will say that no more than $5,000 per month should go into this account. Or it can say that for the taxes account, no more than $15,000 per quarter should go into this account. It's completely up to you how you want to set it and measure it. But the way the two work, the budget and the bookkeeping, the way they work together, oh, it's beautiful. You can run a profit and loss statement in the bookkeeping system to see how much money has been placed into each account and compare that to the budget and see if you're over or under the amount that you set. Let me give you an example. Let's say that you set a monthly budget and you said that no more than $10,000 should go towards expenses and $5,000 should go towards taxes and no more than $5,000 should go towards the owner draw, which is your pay. Okay. You'll then run the profit and loss report from the bookkeeping system and you'll see the amounts that are in the account. And all you simply do is cross-check to make sure that they are on track and on budget. From there, you adjust as needed. If you, like in this example, the expenses match, well, look, the taxes is smaller. You have $5,000 versus $4,000. The owner draw went over a little bit. But again, from there, you adjust as needed. And if you need to know more about budgeting and bookkeeping, check out my other videos where I go into detail about it. But there you have it, family. Just get yourself one business bank account and manage it with a budget and the bookkeeping system. As always, if you liked this video, make sure that you hit that subscribe button, give it a thumbs up, comment for more, and remember, keep your head to the sky. Peace.
Perfect.